The world is a risky place and becoming, it seems, increasingly so. Today, we have a new report from Marsh talking about those global risks, as well as a big change in branding. With me is CEO of Marsh, John Doyle. It's great to have you here. Thank you for joining us for the CNBC exclusive.
Thanks, Contessa. It's good to be with you.
You are announcing today a big change to Marsh. That's going to be just the name, but also a consolidation of some of the best known businesses under the Marsh umbrella. Guy Carpenter, Mercer. Talk to me a little bit about why now and what this means for the industry.
It's an exciting day for us. We're announcing the rebrand of our company under the new and expanded Marsh name. Marsh, of course, has been an important part of our history. Henry Marsh founded our company in 1871. We are a 155-year-old company that is more relevant than ever. And in this increasingly complex world and volatile world, and I'm sure we'll talk about, the opportunity for us to better serve our customers from each of our businesses and bringing those unique capabilities together, it's a big opportunity for us. And so coming together and bringing our businesses together to help our clients thrive and succeed through this complex world is why we made the change today.
I think one of the interesting things about brokerages, which also function as consultancies, is that you are seeing how business operates at a detailed level around the globe. You have insight that most titans of industry do not have because you're seeing all kinds of businesses. When you look at the survey of global leaders, and I know you're going to present this report at Davos, but when you look at this report and you see that geoeconomic confrontation is now the single biggest short-term concern, what does that tell you about the world that we're living in?
Well, as I mentioned, it is an increasingly complex world. And while today is not a moment of a big global crisis, it is a moment of polycrisis, right? And so whether it's geoeconomic confrontation, trade wars, culture wars, rapid development of technology, we're in the early days of a technology revolution, the impact of extreme weather on economies and societies all over the world. It's a lot for businesses to confront and to manage through, and we have a unique collection of capabilities that can help our clients navigate all this complexity.
Extreme weather has fallen to fourth on this list, but when you look at the damage, say, that was done last year in Southern California with the fire in the Palisades and in Altadena, it's a remarkable cost to society, it's a remarkable cost to insurers, and that cost gets borne eventually by society in general. How do we think about, or how should we be thinking about extreme weather?
Well, I'm quite concerned about the impact of extreme weather on society first and foremost, but on the economy. And so yes, we're now just a year past the tragedy that unfolded in Southern California, and we see sadly events happen like this all over the world, but a devastating impact on the community there, on the people of Southern California, but also the economy. And so it's important for us to learn from these events, and we have a tremendous amount of data that can better serve as we look to rebuild in Southern California. So we build in a more resilient way, and so the next time there will be a fire, and there will be a fire in Southern California, sadly, the community can withstand it in a better way.
What we've seen though is the insurers getting much more stringent about where they're willing to offer coverage. They just don't think if regulators are going to artificially suppress rates, keep them low, which is popular with consumers, it doesn't make good business sense to go in and shoulder that risk. The consumers end up paying anyway because, for instance, the FAIR Plan didn't have enough money to pay out. Does there need to be a different system in place for how we insure high-risk places, whether it's the Florida coast or, Tornado Alley?
Well, there's a lot in that question, of course, and California is a unique regulatory environment. I do think in a different system we could attract more capital to that marketplace. There are risk takers, there are investors in insurance companies that are willing to finance these risks. But it's not just rates, it's also making sure that building codes are appropriate, that we learn from prior events, and that the technologies are deployed so that the risk can be managed effectively. The industry is eager and anxious to support these kinds of events, but again, we need to learn from them and not just build in the same way, in the same places, and know that the same tragedy is going to happen in a few years' time.
From what you've seen, are the building codes in Southern California enough?
Yeah, I think we've seen some progress in communities, and what you saw in Southern California was inconsistency. There wasn't a uniformity to codes across various communities. But it's not just building codes, it's bigger, broader infrastructure, of course, to end emergency warning systems. There's a long list of issues that, again, our industry is very, very well served to help manage those risks going forward.
Number 2 on this list of concerns over the short term, so that's 2 years. I've never seen this on a list before. Misinformation and disinformation. What does that mean?
Well, I think what's coming out in that survey is with the rapid development of AI and the ability now to have deepfakes and misinformation is growing considerably. And what kind of risks does that create to markets? New York Stock Exchange, for example, those kinds of disruptions are potentially quite big. But I'm excited about the possibilities around AI, but there's certainly real risks. Misinformation being one, cyber risk, of course, dislocation in the economy, certain types of jobs. So there's a lot for the world to confront. And again, this is a great example of why we're coming together under Marsh, because we have a collection of capabilities that can help clients think through those possibilities.
When people come to you and they ask you about how to insure against AI risks, what do you tell them? Because I'm looking here, the adverse outcomes of AI technology, that has shown the most growth in a single year, went from 30th in the short term to number 5 on long-term worries.
Yeah, not a surprise to me, given the conversations I'm having with other CEOs and other business leaders. One of the risks that I don't think is getting enough attention today is the potential for heightened cyber risk, for example. So that's an example where we can help clients understand the best ways that they can to mitigate those potential risks, but also put in place risk financing through insurance for cyber risk. Other aspects of it around planning around how it impacts your workforce are areas where we have great consulting capabilities, and we're helping companies think through how to deploy AI in their workplaces today.
Do you think that AI could replace brokerages? Can it replace insurance brokers?
No, I don't see that today. But what I see, and we're investing, quite a bit in AI, and we're excited about the possibility. And what I see is that it can make our people even better. We've always been a data-driven company, but the possibilities around these new LLMs and the emerging technologies is a real opportunity for us. Now, will there be disruption to certain job families inside of our workplace? Yes, and I think that's going to be the case in most businesses.
We've also talked on CNBC about the opportunity for insurance, for the brokers, and all adjacent businesses around these mega billion-dollar data centers. How do you think about the risk that comes along with those? I mean, if you have a $30 billion facility and that gets hit by an F5 tornado, that's a lot of damage, which no insurer wants to shoulder solely.
Well, not one insurer will, but, and by the way, data centers, understandably, we're in the construction phase of these massive facilities all over the world. We're a market leader in this area, but it's broader than the data centers themselves. It's a big digital infrastructure ecosystem, if you will, that needs to support the rapid expansion and investment in these areas. So not one insurer, and by the way, maybe not just insurers. We need to bring third-party investors along, and we have capital and advisory capabilities that can bring other investors in to help finance big construction risks.
We saw what happened last year when President Trump announced tariffs against most of the world. The stock market took a huge decline. The investments paused because people didn't know what to think about where the world was going. Has it improved? Are you finding that there's more gut for risk right now and the volatility, that this is just the way it is and we're going to have to invest and think about the risk, but the risk is there?
Well, when you go back, a year ago when the new administration came into to office, it was quite clear they were going to operate with a different playbook, and we're looking to disrupt certain parts of the economy and reinvent different ways, including global trade, of course. And so while that wasn't surprising, particularly surprising, I think, to most business leaders, it did take a bit of time for many leaders to think through what the consequences were to their stakeholders, to their investors, to their clients, and to their companies themselves. And so, I think now what I've seen, late last year is businesses are making decisions. You need to ultimately move forward and do the best you can and represent your stakeholders and communicate effectively with the administration. And so I think some of the tail scenarios around some of the uncertainty have begun to come in over the course of the last year. And so I'm starting to see more and more businesses invest with confidence.
The implied threats to block Exxon from participating in Venezuela, the president said he didn't like the way that Exxon responded. The threat against Jerome Powell with a DOJ investigation. The threat of limiting what banks can charge for credit card interest rates. All of these are actions taken at the executive level. Have you changed the way you're advising companies now in terms of dealing with that kind of risk?
Well, obviously we provide a wide range of advice to businesses in a wide range of issues, and operate in 100 different countries all over the world. And so there's not one set answer. But if you're operating in an industry or in a segment of the economy where the administration is keenly interested in some measure of change, communication with the administration is absolutely critical. And that's what I will tell you get with the Trump administration. You're going to get an audience. You may not always agree, and ultimately you need to decide what's best for your business, but communicating effectively is critical in this environment.
Is there enough capital in the insurance industry and reinsurance right now?
I do think there is enough capital. There's a lot of uninsured risk. Capital continues to grow. Underwriting results for insurers and reinsurers were pretty strong. So with retained earnings and third-party capital that's coming into the industry, capital seems quite sufficient. Having said that, some of the areas of investment we talked about around digital infrastructure, for example, may stretch that. So it's a growth opportunity for investors. And again, our job is to represent our clients and helping them think through those risks and those investments. And so a big part of what we can do with the data that we have is attract other investment to support some of these bigger risks that we talked about.
When you go to Davos, you'll have a chance to talk to leaders from around the globe and talk to them about what's keeping them up at night. What keeps you up at night?
Well, there's a lot happening, right? And when I look back on my career, it's really the complexity of today what makes today stand out, right? It's really extraordinary. We talked about geoeconomic disruption, but geopolitical events, trade wars, culture wars. Again, early days of a technology revolution. It's a lot for any of us. And so as a business leader, I worry about all those things, but I'm also excited about the possibilities around some of these areas of investment, what they can mean for the economy over time. Like AI is a great example. We have massive amounts of data. We're the largest in the markets that we serve. And so using that data to better attract, to help better serve our customers and enable them to thrive in all of this complexity and volatility, that's a big opportunity. And we're a company of scale, and it's a great way that we can bring scale benefits to our key stakeholders.
John, it's a pleasure talking to you. Thank you so much.
Thanks, Contessa. It's great to be with you.